Current market data indicates that Hyperscale Data Inc., trading under the ticker symbol GPUS, is changing hands right now at exactly 25 cents, representing a robust intraday gain of approximately 1.1 cents or 4.5%. While a 25-cent stock might typically be dismissed by the institutional heavyweights as mere market noise or retail debris, the activity we are witnessing on the tape today tells a completely different story. What you are looking at is not just a penny stock moving on volatility. You are looking at one of the most extreme value dislocations in the entire public market. The expectation for a company trading at this price level, specifically one with a history of complex capital structures and aggressive dilution, is that the equity is worthless, a trap for unsuspecting retail traders. The narrative has long been that this is a confusing holding company with too many moving parts and not enough focus. However, the reality that is beginning to dawn on the market and driving this 4.5% surge today is that hyperscale data has quietly transformed itself into a mathematical anomaly. We are looking at a company where the value of its liquid Bitcoin treasury alone is rapidly approaching the total value of its entire market capitalization. This means, in effect, the market is assigning a near zero or perhaps even negative value to its massive physical data center operations in Michigan. This is the sum of the parts discrepancy that smart money is starting to pick apart today. When you analyze the order flow hitting the tape this morning, specifically through platforms like Interactive Brokers trading dashboards or the active trader tools on the Fidelity trading platform, you see a very specific type of accumulation. This isn't just panic buying, it is calculated absorption. The bid support at 24 cents has been rock solid, absorbing selling pressure from weary long-term holders who are simply happy to see green. Who is on the other side of those trades? It appears to be value-focused accounts and potentially algorithmic arbitrage bots that are programmed to track net asset value, or NAV. These algorithms are spotting that for every 25 cents you spend on a share of GPUS, you are getting roughly 23 to 24 cents worth of Bitcoin and cash, effectively getting a fully operational, AI-ready data center for a penny. That is the reality that exceeds the expectation of a dying penny stock. The market hates uncertainty, but it loves a discount, and right now, GPUS is trading like a closed-end fund priced at a massive discount to its holdings. Let's address the elephant in the room, the history. For those of you who've been in the game for a while, perhaps managing your self-investing portfolios or discussing ideas on investing sites, you might know this company by its former names BitNail, Ault Alliance, or Digital Power. The expectation is that it's just another Todd Alt special, implying a fear of endless dilution and capital raises. This reputation is the heavy blanket that has kept the stock price suppressed. Investors expect that any rally will be met with an equity offering. However, the reality of the last few months has shown a distinct pivot in strategy, a pivot towards simplifying the story and cleaning up the balance sheet. The company recently announced a debt reduction of roughly $30 million. In the world of distressed small caps, paying down debt is the ultimate signal of stabilization. It removes the boot from the throat of the equity. This move, combined with the rebranding to Hyperscale Data, signals a desire to be judged not as a holding company, but as a pure-play infrastructure asset. The surge to 25 cents today is also intrinsically linked to the broader Trump trade, or the crypto renaissance we are seeing globally. With Bitcoin hovering near all-time highs, companies that hold Bitcoin on their balance sheet are acting as high-beta proxies. But unlike MicroStrategy, which trades at a massive premium to its Bitcoin holdings, Hyperscale Data trades at a discount. This is the arbitrage. Traders using Robinhood crypto accounts to trade the coin often look for equity proxies when they want leverage. GPUS is becoming that proxy for the deep value crowd. The Bitcoin-anchored strategy that the company has touted is not just a marketing slogan, it is a balance sheet reality. They are mining Bitcoin, yes, but more importantly, they are keeping it. The executive chairman's recent letter was explicit. They regret selling Bitcoin in the past and have vowed to build a treasury that rivals their market cap. When you buy the stock today at 25 cents, you are essentially buying a fractional share of that Bitcoin treasury with the data center business thrown in as a free call option on the AI boom. Let's dive deeper into that free option, the Michigan data center. This is where the Hyperscale name comes from, and this is where the long-term 10x potential lies. The expectation for a company of this size is that they operate a few server racks in a rented warehouse. The reality is they own a massive industrial-scale facility in Michigan with access to power, the single most scarce resource in the AI world right now. We are talking about a facility with plans to expand from 30 megawatts to 70 megawatts and eventually potentially to 340 megawatts. In an era where hyperscalers like Microsoft and Amazon are scouring the globe for power capacity to run their AI models, a facility with 300-plus megawatts of potential power is a strategic jewel. The fact that this asset is sitting inside a 25-cent stock is the inefficiency that the market is trying to correct. Investors using Schwab Intelligent Portfolios or looking for investment help often miss these situations because the screens filter out stocks under $1. But the physical reality of concrete, steel, and transformers in Michigan does not care about the stock price. The asset exists, it is valuable, and it is currently being ignored by the efficient market hypothesis. The volume we are seeing today, millions of shares changing hands, suggests a rotation. The tired hands are leaving, and the value hunters are entering. We are also seeing some sector sympathy with other data center plays. When NVIDIA stock rallies or when we hear news about nuclear power for data centers, money trickles down the risk curve. It starts with the big boys, moves to the mid-caps, and eventually finds the forgotten small caps like GPUS. The 4.50% move today is a ripple effect of that massive tidal wave of capital entering the physical infrastructure sector. The market is realizing that you can't have AI without power, and you can't have power without data centers. Hyperscale data sits at the intersection of these two massive secular trends: the store of value, Bitcoin, and the consumption of energy, AI. I want you to pause for a second and check your own bias. When you see a stock trading at 25 cents, what is your gut reaction? Is it stay away or opportunity? Comment below with your thoughts on deep value penny stocks. Do you own any GPUS, or are you waiting for the breakout above 30 cents? Let me know. Now, let's talk about the restructuring plan, because this is the roadmap to realizing value. The company has explicitly stated plans to divest its other holdings, the lending arm, the hotels, the defense electronics business, basically everything that isn't the data center and the Bitcoin. This is crucial. Conglomerates trade at a discount because they're hard to analyze. A pure-play data center stock often trades at 20 or 30x EBITDA. By stripping away the noise and spinning off the Ault Capital Group assets, Hyperscale Data is attempting to force the market to value the remaining business correctly. The expectation is that this divestiture will be messy and take forever. The reality is that they have set a timeline for 2026, and the filing of the Series F preferred shares was the first concrete step in that legal process. This shows intent. It shows that management is aligned with the idea of unlocking value, rather than just hoarding assets. For those of you using Fidelity brokerage accounts or Fidelity ARAs, you might be wondering about the dividends. Yes, this 25-cent stock pays dividends on its preferred shares, which is another anomaly. But for the common shareholder, the focus is on capital appreciation. The risk here is obvious: time. can they execute the turnaround before they run out of cash? The debt reduction answers that partially. It buys them runway. The Bitcoin treasury answers the other part. It gives them a liquid piggy bank. If they ever get into a true liquidity crisis, they can sell Bitcoin. Most penny stocks don't have a $70 million piggy bank. They just have toxic convertible debt. GPUS has both, to be fair, but the asset side of the ledger is far stronger than its peers. We also need to discuss the technicals of the trade. The 25-cent level is a psychological barrier. It's a quarter. Breaking through this with volume, as we are attempting to do today, opens the door to the next resistance levels at 30 and 35 cents. The chart has been in a brutal downtrend for a year, effectively a widowmaker chart, but recent months